Good afternoon, everyone, and a very warm welcome in from the cold to Ironmonger's Hall today. Watashi wa Jack Knight des. This should mean my name is Jack Knight. Thank you. I'm the Deputy Chief Executive of the Investment Association, and I'm going to be the MC for today. Yokoso, my second of three attempts at the Japanese language. That's welcome. And thank you very much, all of you, for battling with the elements and coming here today, taking time out of your busy schedules to join us at the Tokyo London Financial Seminar 2026. I've got a few housekeeping notices to give before we get started. So today's program will be conducted in English. For those who wish to listen in Japanese, please use the interpretation app, which you can get details about from reception if you haven't done so already. Please put your phones on silent mode. Please note that photography and audio recording are permitted only for the event staff and press. We're not anticipating any fire alarms or fire practices, so if you do hear an alarm, please follow the exit signs and leave the building. And for online participants who require interpretation, please check the slide that should be showing on your systems now. Right, I think we can get started. So this seminar is jointly hosted by the Tokyo Metropolitan Government and the City of London Corporation under the Memorandum of Understanding on Exchange and Cooperation, originally signed in December 2017 and updated last year in September 2025. The purpose of this seminar is to promote investment between Japan and the UK. This year in particular, we aim to strengthen investment flows between our two countries through candid discussions on the current state of the market access, and by exploring new opportunities. Therefore, to open the seminar, I'm delighted to welcome the Right Honourable, the Lady Mayor of London, Dame Susan Langley, who will deliver the opening remarks and keynote speech. Lady Mayor, please take the stage.
Thank you. And you will be pleased to know I am not attempting to speak in Japanese, because I can tell you now it's not my best language, I'm afraid. But ladies and gentlemen, good afternoon. And on behalf of the City of London Corporation and the Tokyo Metropolitan Government, a very, very warm welcome to, I understand, this 10th edition of the Tokyo London Finance Seminar. But firstly, I would like to take the opportunity to thank everyone here at Ironmonger's Hall for hosting us today. It really is a beautiful hall, as well as the Embassy of Japan in the UK, the Japan Financial Services Agency, Japan Exchange Group, and the Japan Securities Dealers Association. I know you've all supported this very, very important event. But for those of you I've not had the opportunity to meet, I'm Dame Susan Langley. I am the Lady Mayor of London, a role in which I serve as the Global Ambassador for Financial and Professional Services. Now, my counterpart, the Governor of Tokyo, Governor Koike, is very sorry, I know, not to be able to join us in person today, but we really look forward to hearing a video message from her shortly. And I'm delighted to say that there are a number of delegates from the Tokyo Metropolitan Government here with us this afternoon. Now, I think there is no escaping the fact that we do meet at a difficult time. Geopolitical tensions test the durability of our alliances, and they also undermine the values of free and open trade, those that both Japan and the UK champion. And I think precisely at the moment when we have so many shared challenges, from climate change to demographic change, we really do need to increasingly work in partnership to find joint solutions. Thankfully, while many others turn inwards, Japan and the UK continuously look outwards. And I think that our relationship is all the stronger for it. Japan, of course, was the very first country we signed a free trade agreement with when we left the European Union. And you also strongly supported the membership of the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, easier to say CPTPP. And of course, the Memorandum of Understanding the City of London and the Tokyo Metropolitan Government have enjoyed since 2017, and which we revised last year, really helps the flow of businesses between our two nations, particularly, of course, in asset management and fintech. Last year, financial exports from the UK to Japan grew by a huge 18%, and our total trade now exceeds 33 billion. So I think it's really no wonder that now it's somewhere in the region of 1,000 Japanese businesses have a base here. And in the UK, and while for the UK, around 450 British companies operate in Japan. So I think we really need to remember that we have a huge amount to celebrate, and importantly, a really solid foundation to build upon. But while our partnerships are indeed strong, there's no complacency on our part. We very much want to make them even stronger still, and we believe there's huge scope to do so. If we look at a quick case in point, the retail investment market in Japan, it's scaling significantly. With an estimated 2,000 trillion yen in dormant household savings to be employed, there are fantastic opportunities for new market entrants, including, of course, UK asset managers looking to expand. And at the same time, Japanese capital can play a really important role in driving forward our growth mission here in the UK, including in areas of mutual interest, from helping us meet sustainability goals and investing in the technologies of the future. It's why I have to say, as Lady Mayor, a key focus of mine is to connect capital to opportunity, both human and financial. And that will take forward the ambition of recent initiatives you may have heard of, like the Mansion House Accord, but to turn it into action through a pipeline of attractive, real-life investment opportunities very much open to Japanese businesses. So finally, I believe we have a great deal to be optimistic about, but there really is so much more we can do together. As partners in business, yes, but in an uncertain, rapidly changing world, as responsible, steadfast friends. And this is a message I look forward to taking with me to Japan when I visit Tokyo later this year. So today is about making connections, exploring areas for collaboration, and highlighting some of the fantastic opportunities for investment, including through honest and transparent discussion on market access realities and complementary reforms. I would like to thank in advance all of the speakers this afternoon, but most importantly, to all of you for being part of this next step in deepening the Japan-UK trade relationship. I hope you find it a really productive and useful session. And once again, I am so very delighted to be able to come here and to be able to welcome you this afternoon. Thank you.
Well, thank you very much, Lady Mayor, for your remarks. Now, as the Lady Mayor said, we have a video message from the Governor of Tokyo, Yoriko Koike. She will deliver her greeting in her role as a conference organizer.
Hello everyone, I'm Koike Yuriko, Governor of Tokyo. Lady Mayor Langley, I'm truly delighted to co-host this year's seminar with you as another female leader of an international financial center. Last year, the Nikkei average surpassed 50,000 yen, or about 240 pounds, for the first time in history. A foreign direct investment has also exceeded £250 billion, and this momentum continues. The Japanese economy is indeed entering a new era of growth. Tokyo Metropolitan Government is making various efforts to enhance Tokyo's presence as an international financial center that attracts considerable funds, talent, and innovation from Japan and across the globe. An official from our government will be introducing some specific initiatives during the seminar. According to the Japanese zodiac, this year is the year of the horse, with the horse symbolizing progress and dynamism. It is said to be a year when business grows and efforts bear fruit. And in the Japanese calendar, 2026 is the 8th year of Reiwa era. In Japan, 8 is considered a lucky number spreading prosperity and happiness. I hope that even those of you who have not yet expanded your business to our city will, on this occasion, take a new step forward on the stage that is Tokyo. Last September, the City of London Corporation and the Tokyo Metropolitan Government revised our MOU to include the promotion of financial innovation and expansion of investment flows between Japan and the UK. I sincerely hope today's seminar will prove to be a valuable occasion that makes a strong contribution to expanding investment between our two countries. Thank you very much. ありがとうございました。
Thank you, Governor Koike. Now, in a few moments, we will move on to our first panel discussion. The theme is Market Access Realities, Addressing Regulatory and Operational Challenges. Now, while the stage is being prepared, I'm going to introduce the speakers for this session, and then they'll come up momentarily afterwards. So the panelists are Mr. Masayuki Sato, Director of Policy Planning Office and Director for International Financial Center at the Japanese FSA, Ms. Laura Dawes, Director of Authorizations at the Financial Conduct Authority, Ms. Mari Nakamura, CEO Nomura Asset Management UK, Mr. Matt Hammond, Partner at Foresight Group, and finally, the moderator for this panel discussion will be Ms. Nicola Watkinson, Managing Director, International, the City UK. I'm now going to hand over to Nikki, who will moderate the discussion. Thank you.
Thank you very much, Jack, and welcome everybody. It's a terrific pleasure to be here today for what I think is going to be a fascinating discussion. And the first thing I'm going to say is that it's not often in many markets where you will get two regulators who are willing to come up on stage and have a real live discussion with some investors about some of the opportunities and challenges and how they're addressing them. So I think this is already a huge mark of the collaboration that exists between the regulators in Japan and the UK, but also the very forward-leaning and business-minded approach that the regulators are developing and growing in order to support asset management moving in both directions. So what we're going to do today is try and make this as interactive as we can. And I'm going to start, though, by asking a few of our businesses who are here today to share their experiences about what it's like coming into each other's market. And then we'll get to put the regulators under focus as they talk about how they're looking at various reforms in order to address these challenges. So, Mari, I'm going to start with you, if you don't mind. So Nomura has obviously had a huge presence in the UK. You've done many different things. I'm sure you have a wealth of experience to offer. Could you perhaps sort of start by talking about some of the experiences that you've had in terms of coming into the UK?
Thank you very much. firstly, let me introduce briefly about myself. My name is Mari Nakamura. I'm a CEO of NAM UK. I have arrived in UK this past June, so it has been about half a year since I was appointed to the NAM UK CEO. And NAM UK has about 80 people as a member, and we have a history for 40 years. And my goal here is to develop our business while adapting more deeply this regulatory environment that emphasizes individual responsibilities. So this past 7 years, I have been involved in our international business from Japan. This includes expanding our products overseas and serving as a gatekeeper, conducting due diligence on the overseas asset managers and bringing their products to the Japanese market. So I have worked on both sides of the international business. However, actually being stationed overseas has brought many new insights that I never expected. I'm still very much in learning stage, but I'm grateful for this opportunity to share some observation from this perspective.
Fantastic. And while we'll come back to you in just a moment, but I'm also going to ask Matt to take a moment to, if you wouldn't just mind introducing yourself, and then also perhaps I can ask you to just start to jump in and share a few of your insights on the work you've done informing Japanese companies looking to do business over here in the UK.
Good afternoon, everyone. As some context for some of you who may not have heard of Foresight Group, we're an alternative asset manager, predominantly based here in the UK. We invest. We currently manage about sort of £14 billion across venture, growth, buyout, energy, infrastructure, natural capital, and private credit. We manage sort of retail money. We have listed funds that we manage here, listed on the LSE, and a lot of institutional capital from local investors and investors sort of globally, and quite a few from Japan. So I guess the context in this, I guess we're a boutique manager investing primarily in private markets, which is really a smaller part, but an interesting part of the overall investment universe. And my context for Japan really is speaking to Japanese investors about what they can do outside of actually this. We have Japanese capital that we manage investing in the UK, elsewhere in Europe and in Australia as well.
Thank you. So as we move quickly through the introductions as well, now Laura, you're going to be under the spotlight later on. Would you care to introduce yourself and talk a little bit about the work you've done between the UK and Japan?
Yes. Hello, I'm Laura Dawes, Director of Authorisations at the Financial Conduct Authority. My role is primarily covering what we call the gateway to financial services, or as we had an event last week, the gateway to growth. We deal with a whole range of different applications for firms to set up within the UK, but one of my primary responsibilities is for all of the applications that might be considered wholesale. So wholesale, sell side, buy side, infrastructures and exchanges, and some of the AFM work. Alongside my day job, this year we have been working closely with the City of London Corporation and others in establishing the Office for Investment Financial Services. It's a bit of a mouthful, which is in recognition of the fact that often firms looking to set up and operate in the UK can find it quite hard to navigate, both from a regulatory perspective, but also from some other perspectives like visas and tax. And we are a very engaged partner in that endeavour with other partners in order to make it easier to navigate the regulatory processes for international firms to set up, grow in the UK, or to invest in the UK. And so in that respect, we engage broadly with different regulators, and we have a strong international division within the FCA that also spends a lot of time engaging with regulators, including those in Japan.
Fantastic. Thank you very much, Laura. And Sato-san, could I please ask you to introduce yourself, please?
Thank you. Thank you for your introduction. My name is Masayuki Sato from JFSA, the Financial Services Agency in Japan. So I am responsible for promoting Japan as an asset management country, and so to attract overseas financial institution to Japan. So the UK and Japan has a long history in finance. So today I would like to explain a policy initiative to welcome foreign asset management companies to Japan, as well explain our future relationship with the UK and Japan. Thank you.
Well, thank you very much. And as you can see, we've got a fantastic panel for this discussion. So I'm going to jump straight over to you, Mari, if you don't mind. Just picking up on your initial comments, you've obviously gained some great insights in coming over here and working in this role. Could you talk to us about some of the challenges and obstacles that you've experienced in terms of doing business here in the UK?
Thank you. Not necessarily in UK, but in order to do the international business, always one of the biggest challenges is that accurately translating the local regulatory thinking, like to the headquarters, and like ensuring they understand the business impact. So, 6 months into my role as CEO after arriving from Japan, I'd like to share the key insights from that unique environment in the UK, particularly. From the beginning, I noticed here in the UK, the process of why decision was reached matters more than what was decided. And for new products launches, for example, meeting minutes must clearly show what risks we discussed and how we made our decision. This documentation approach was quite different from what I had experienced in Japan. In Japan, the focus often centers on the final outcome rather than the deliberation process itself. So what I have come to believe is that FCA principles are based on the distinctly British concept. People, not organization, are the ones who act. When we face issues that might be seen as an organization problem in Japan, here, the question is always who takes responsibility for that decision. The individual accountability framework shapes every aspect of how we operate in this market. I believe this philosophy shows up most clearly in that SMF framework. When we create SMF applications, we must provide thorough documents, not just of the job titles, but of specific decision-making content and responsibility areas. As CEO, I have learned firsthand that I bear ultimate accountability for explaining the risks of our company takes and how we manage them. This personal responsibility cannot be delegated or shared with the organization as a whole. The next step is embedding this people act mindset into daily operation, I think. The key is creating healthy foundation for decision making, recognizing the importance of tone from the top. So I regularly communicate about the value of cognitive diversity. I make it clear to our team that different perspectives strengthen our decision making process. They also help us identify risks we might otherwise miss. In a hybrid working environment, companies often face two main risks: information gaps and people being reluctant to speak up. To address this, we have launched a monthly newsletter that is run by employee volunteers in our company. This small initiative helps individuals share information more freely. It also encourages open dialogue between team members. These efforts form the foundation of healthy culture that aligns with UK regulatory thinking, I think. As I continue to learn and adapt this regulatory environment, I remain committed to developing our business. At the same time, I fully embrace the culture of individual responsibility that define the UK financial service landscape.
Thanks, Mari. Before I pass to Laura, I'm wondering, Matt, Does that, has that been an experience that you found from other Japanese companies looking to come over? That difference of sort of, if you like, collective versus individual accountability, a more principles-based system, some of the culture of not of being needing to speak up about things. What's been your experience?
Yeah, there's some similar themes there. I guess I'm trying to do, I guess, a different role than that. But certainly, some of the challenges we've had, I guess, to take a small step back. With at the moment, the big themes generally are, institutional investors around the world are looking to allocate more money to private markets. Very sort of generally speaking. Another theme that for someone in my position is a very helpful theme. Running counter to that is that in order to seek sort of greater efficiencies, and everyone's under cost pressure, and everyone wants to do things that I guess are sort of seen as easier decisions, there's a lot of consolidation going on among private markets managers. A lot of very big investors would rather have a few relationships with smaller managers rather than endless relationships. You'd rather have 6 or 8 managers investing money in infrastructure globally, and the same rather than it's just easier to manage. So as a small, like the city of London is full of, boutique investment managers in areas like alternatives and elsewhere, trying to remain relevant to the very largest investors is the key. It's easier in your group decision making others to you can always give all your money to the biggest global asset managers in the world. Most big investors, though, are also realizing that if all of your capital goes to the biggest managers in the world, then you end up with a lot of the same things. You're not covering the whole investment universe if you do that. So that's our sort of thing, to try and remain, pitch ourselves as credible and a safe place to manage people's money. Everyone's managing someone else's pension, but by being distinct and different from the biggest managers in the world. And that does take a long time in any market. I think often when we talk about how you deal with Japanese companies, well, it takes a long time. You have to build long-term relationships. You have to visit a lot. That's true. It's also true of most of the world. So I wouldn't want to get sort of carried away with sort of too much. But to present yourself as a safe pair of hands for people's capital, as a safe decision to take, even if but by still being unique enough to be offering unique investment strategies that the City of London proliferates in, and not just another sort of mega cap, single, sort of global fund that offers a very generic product. So there's a balance there, and presenting that to a sort of a Japanese audience in the right way it does take a little time to learn. Yeah.
Well, thank you. Well, I think that's given us some interesting food for thought, and I might add in, one of the other issues, and this is probably me taking moderator privilege here, is that a number of the companies that we work with coming from Japan over to the UK also talk about the senior manager regime and some of the time it takes to get people like Mari into role. So I think we've got some interesting points here for you, Laura, around I guess the overall approach the FCA takes, time for approvals, some of the ways in which we manage risk here in the UK between big and smaller providers. Is that something you'd be happy to pick up and talk to?
Yes, happy to, and I will try and cover all of those things. And apologies if I don't. I think it's probably worth reflecting that one of the things that we have been thinking a lot about at the FCA is that actually we, even for firms based in the UK, regulation and the FCA can be actually quite hard to navigate. And as part of developing our new strategy, we have been much more forward thinking and thinking about how we engage with industry, both within the UK and outside the UK, and how we can make it easier for people, whether they're individuals approaching an SMF responsibility or firms looking to set up in the UK, to understand and navigate that regulation. One of those things I talked about was being an active partner in the Office for Investment Financial Services, which is to offer a concierge service for firms looking to start up. But we've also been doing a lot internally to the FCA. So to give a few examples, and there's a lot, so I'll try not to go into all of it. We have been doing a lot of work in authorizations to improve the speed of our processes more generally. Both in relation to the SMF applications and also for new firm authorizations. We, in our last data that we published quarterly, have improved the speed for new firm authorization such that 50% are authorized within 4 months of an application. And we have also significantly reduced the time for people to achieve their approved person status. But we're not stopping there. We are actually going to be measuring ourselves against new shorter timelines from February, and we're publishing our performance against those. And that is available publicly. So anyone looking to apply to the UK can find transparent information about how long it might take for their application to be processed. In addition to that, we are, with government, looking at reforming the senior managers regime, and also going beyond that, thinking about how we can support and encourage people to come to the UK. On that theme of navigation, we created a new web page which is called FCA Support Services, which talks about all the different offerings that we have in one place. Some of those relate directly to authorization. Others relate to how we are supporting firms to innovate in the UK, for example, through the regulatory sandbox or the AI lab that we have and that a number of people are testing within. And we tried to bring that all together in one place, one web page, so people can access that. One of the key things it's probably worth me highlighting from a authorizations perspective there, which is set out on those pages, is what we call our pre-application support service. That is a service where we will have meetings which are free with firms looking to set up in the UK. The idea being that firms can come to us, talk to us about what they are looking to do, what they are thinking of applying for, and we can engage with them about both the permissions they might need from an FCA regulatory perspective, what documents we would expect them to submit, and also provide kind of guidance on the forms and things that they would need to complete and the level of detail that we would expect to see. The purpose being that people, when they do go to submit an application, are better prepared, and it makes it easier for us to make decisions quickly. So we're doing quite a lot to try and address some of those things. And I guess just touching on what Mario was talking about, part of those pre-application support meetings and talking about what we would expect from senior managers will help, educate and support people to better understand the expectations when they do move to the UK. So I think I've touched on everything.
Yes, can I just I think that was fantastic, and I love the idea of the concierge service. That sounds like a fantastic addition, and also the website and the sort of pre-conversations. I think anything that helps to make it easier for companies to understand their obligations up front is terrific. I know you've also been looking at efficiency and some of the work around innovation as well. You briefly touched on the regulatory sandboxes. I don't know if you'd like to say a little bit more about that. And also, I think about the big debate which we may come to, here in the UK about risk management too, and how to get that balance of risk and opportunity right.
So dealing first with innovation, we have a range of what we call innovation pathways or innovation services. They all started over, I think it's 11 years ago. Please don't quote me if I've got that wrong. It's at least 10 or 11 years with what was the world's then first regulatory sandbox, and have expanded since to offer a number of different ways in which firms can engage with the FCA to explore innovative products, to access data that we have, and also now, as I say, to experiment with AI. There are certain eligibility criteria for firms wanting to be within the regulatory sandbox. And again, you can find information on our web pages. But one of the things we have done to better support firms, even in the regulatory sandbox, is that every firm in the regulatory sandbox now has an authorization case officer allocated to them. They work in parallel with the colleagues in innovation to ensure that if a firm wants to test a product in the UK, that they understand what permissions they will require and can get on the front foot in terms of making the applications they would need in order to be able to do business in the UK. And I think it's just coming to that other point about risk management. I think one of the things that we have been reflecting on as part of our strategy is what is the right balance between risk and opportunity. And you very well have seen our CEO, Nick O'Rati, talking about the need to rebalance risk and the way we think about risk in the financial system. And that is something that we are thinking about broadly across all of the work in the FCA, but also speaks very much to two of the key strands in our strategy, supporting growth and smarter regulator. And across both of those, we are thinking about how we can rebalance risk, but also be a smarter regulator to support growth. And that includes things like reducing the number of data requests that we have from firms where they are outdated, but also reforming some of the current regimes in order to ensure that they're not just fit for now, but also thinking about how they will be fit for the future. And that cuts across things like sustainability and the AFM regime.
That's fantastic, Laura. Mari, can I just ask you to reflect on some of that? Do you think some of those pre-meetings and pre-authorization conversations would be useful for new companies or new CEOs coming into role?
Yes, definitely. I think like it's very helpful. Personally, in the beginning, like I understand that the SMCR regime, like a scheme, has played a very important role to clarify the individual accountability, especially after the financial crisis, the lessons from which we learned at the financial crisis. But at the same time, I have to admit that the process, to get approval, has been a little bit complexity. It made a little bit the burden for the daily operational work for our members or company. So having said that, I'm hopeful that the a meeting, pre-discussion or the education concierge will be a really big support for the new CEO or new company get into UK to understand what is the process, how long it will take, so that they can learn they think that the time frame as such. So for the people who come to UK as a new market, firstly, to understanding the principle of the proportionality is also important. It depends on the size of the company or the business, what they have to prepare. They don't have to prepare full size from the beginning. Depending on if the size of the business is not that large, maybe they can have informal discussion with the FCA and what is the best fit is for their business. I think to understand that is very important, and also to understand that the regulatory philosophy is also important. Just not only a merely follow this is what we should do. This is what we should do. It's not only the operational thing. If they understand, we understand why this is implemented. They can understand more effectively to implement that. And thirdly, I think actively utilize the local expertise is also important. In our company as well, we have a really good staff to understand the legal and compliance thing. And I think in London, there's many people resources to be in charge of that aspect. So even if the people try to come into the UK market from overseas, we have a lot of people to support within the London. I think that is the thing I can advise for the people who want to come to the UK market as a new market.
That sounds fantastic. And I think that point about proportional regulation is something that I know FCA is also very focused on, as well as some of that those pre-meetings and the use of obviously UK expertise as well within the firm. So thank you for that. Those are some excellent insights. I am now going to flip to talk about things with Japan. So Matt, I know that when you started this off, you talked about the need to build long-term relationships in both directions, and the fact that the UK has sort of offerings, specialty offerings, if you like, a more specialized service that it can offer to Japan. When you think about the way in which you've been doing business with Japanese companies, how does that make things a little bit more complicated? Does it take longer time to get business done? Is there an appreciation of what a boutique offering looks like for Japan, and any issues that you would see for UK companies looking to do business over in the market?
Okay. Thank you for sharing information. And we don't have a senior management regimes, but a regulator should maintain a sound market, and we should continue to review regulatory frameworks. So, and the UK's experience is very useful for me. So Japan has working to attract overseas asset management companies, and we actively have communication to hear the feedback from industry and a wide range of financial institutions. So the most common concern we hear is it took too long to obtain a license in Japan. So some global funds said to me that the efficient license is very more important than smart regulation. So since regulators are necessary to maintain the sound market with regulations, so then moreover, there is a language barrier between Japanese regulators and overseas firms, so which can be significant hurdle to the new company to overcome. So today, what I want to say is we have made a significant process in addressing these issues. So let me explain briefly it. So 5 years ago, we established the Financial Market Entry Office, which provides consultation in English to firms considering entry into Japanese market. So the office has been asking them about the business they intend to conduct, and provide them advice and support for the documentation. So moreover, we also made it possible to submit English documentation to our license division. So in addition, the office also assistant in English on a wide range of practical matters for new business, like such as how to open the banking account and real estate issues and blah blah blah. So as a result, now five new companies have finalized the license procedures, and they started the business in Japan. So this is our initial achievement.
Thank you. And being able to reduce that approval and licensing time, I think, and the office that has been established, which I know has been done with the Tokyo Metropolitan government and other players as well, is definitely welcome, and something that I know is well used. Can I ask Matt now to come in and maybe talk about some of those points about how easy it is to do business in Japan, where you see the opportunities to do more?
Yes, I guess a couple of points to follow up that. I guess where we started purely because I guess we had the opportunity to do. I mean, out of London, we invest capital into the UK, into the rest of Europe, and also into Australia. When we first started to, I guess, visit Tokyo, trying to build investor relationships, it was much clearer that everyone, a lot of the big institutional investors there, were much more comfortable. Had a lot of experience investing in Australia, which might not seem obvious from here, but in that part of the world, it's true. I mean, every big Japanese institutional investor has an Australian real estate portfolio. That would be quite normal. So it was an easier conversation for us to have. That was how we sort of started the relationship. We sort of started by putting in front of people the easiest thing, the most likely thing that people would do. And then having had several Japanese investors invest into our sort of Australian products, we then started to talk about the funds that we manage out of London, investing here and in the rest of Europe. So that was just an easier way to build, to invest the time, justify investing the time in building those relationships. When it comes to sort of the regulatory things and other barriers, it's interesting. I think if you're a very large asset manager looking to establish operations in Japan, then the regulatory environment is very important. And as Sato-san said, efforts to try and make that more accommodating are always sort of useful. As a smaller sort of, you call it a boutique manager, the reality is, like in most of the world, in fact, anywhere outside of Europe, we would never do anything without local partners. So whether we these sort of having to work through gatekeepers to speak to the real investors is not really a hurdle for us, because we'd have to have someone with us anyway. We always have advisors. Whether it's placement agents or the big asset managers helping us find clients, we always do things with partners. We did. We did last year before last, actually. We established a specific fund. We were looking to establish a global hydrogen fund. Hydrogen was a bit of a theme at the time. Overwhelmingly, it was interesting. The most interest we got from anywhere in the world was from Japan.
Mm.
A lot of investment capital, a lot of companies, as well as financial institutions in Japan, had clearly understood that, as a country with a lot of heavy industry, as a country where the government had seen that sort of hydrogen was part of a sort of a greener future, a lot of people got behind that. So we were very close to raising all the money there, actually, and it was no particular barriers to that. We were working with local partners. We'd always do.
Thank you. And I think that point about local partners is a really interesting one to help to navigate. Mari, I'm going to bring you in, because I know, as well as thinking about the reflections on doing business in the UK, you also support many UK and foreign companies coming into Japan. Before I pass back to Sato-san, could I ask you, what has been the experience that you've had of the challenges that foreign companies have coming into Japan?
Thank you. As mentioned, that I was in charge of the business. Like a work. Before, like I came to the United Kingdom, I was in charge of like a due diligence of the global manager, and to bring their like a flagship products to Japanese market. So we had the seminar in 2025 in New York as well as in London, like toward the asset manager who wants to come into the Japanese market. Why? We are partly competitor, but at the same time, we are the partner in terms of we are gatekeeper for the asset manager global, like outside of Japan, who wants to come into the Japanese market, but doesn't have confidence or the capability or the size to directly come to Japan like a first time. So we did the trend or what is happening in Japanese asset management industry, as well as like by cooperating with the Japanese FSA, we are also like promoted that we have that opening offices, like said by the Japanese FSA. That kind of information was provided, and the reaction like from the attendees was like, what is a hurdle? Firstly, the language, and second thing is not so many information yet like provided, even like in New York or London. So I think like those are the challenges yet, but like we try to like promote and like spread like those information to those people, like they understand more well known. So I think that will be like a more, how can I say, understood by the overseas the asset managers.
Thank you. And Sato-san, may I just ask for a quick comment? So some of the challenges raised have been about the speed of approvals. You've talked about that. The language barriers and producing more material in English for people wanting to come in. Hopefully, some of the apps will help with the language conversation, but the written material is still important. And finally, the approach to risk, because in the same way I challenged Laura, I think also the view is Japanese regulators are very conservative, tend to be quite risk averse. Is that something you're looking at within the FSA?
I think we want to be a market friendly regulator. So yeah, and we think we decided to take a balance between the market participant and friendly regulators and the protection of consumers. So, and I want to change the conversation, these attitudes, incorporate with the industry.
Fantastic. Well, I mean, we do have this dialogue that exists between the UK and Japan, our financial dialogue. And it would be interesting to hear from you some of the topics that you might be thinking about, where you see areas for more collaboration between the regulators in Japan and in the UK. And maybe some of, Laura, to your point, those forward leaning themes. Obviously, there's a lot going on around digital finance and also, obviously, more to be done in asset management. Could you talk a little bit about how you see the regulators collaborating together?
Yeah, I'm happy to. So it's probably worth saying that London and Tokyo have a shared commitment to and responsibility for financial excellence, innovation, and global leadership. And we think there's enormous potential to strengthen links between our markets and continue to strengthen our relationship with the JFSA. And we were really, really pleased to hear about some of the JFA's initiatives last year during the Financial Regulatory Forum. And we're really looking forward to the next forum in March, where we'll continue to build upon those, because we see the initiatives resonate quite strongly with the FCA's objectives about ensuring open, competitive markets, reducing unnecessary barriers to entry, and fostering that greater international alignment. We also think that that relationship is critical to supporting not only Japanese firms to set up in the UK and operate, but also to facilitate firms from the UK moving across. And we see there's particular opportunities. You also touched on digital assets. So that's one area where we were very grateful to the JFSA for some of their insights, which has influenced some of our policy work in that area. There are clear aligned goals in us continuing to try and shape sustainability disclosures and things in relation to ESG for the benefit of the wider market. And I think by working together, we can ensure that we do the best for both economies. I think one thing that I forgot to mention earlier, and it's probably worth saying, which is part of our commitment to continuing that relationship, is that we're actually meeting with the JFSA this week. And we also have our director of APAC, Camille Blackburn. One of the new postings that we have around the world is actually going to be in Japan next week, meeting with regulators, meeting with some professional services bodies and also some trade unions, so that we are building those relationships both in Japan with firms on the ground in Japan, but also supporting UK firms to set up in Japan as well. So lots of opportunities. We really value the relationship.
Thank you. And I have to say, I think we all commend the appointment of Camille and your other overseas representatives. It's a great way to really help UK businesses to understand what the two-way opportunities are and to build that dialogue with so many of our most important trade and investment partners. Sato-san, I'm sure as you're in your role as the Director of International Financial Centre, you have also thought about areas where Japan and the UK could have more regulatory cooperation.
Yeah, I totally agree with Laura, and I would like to share my personal views on cooperation with the UK. And first of all, for example, 100 years ago, a Japanese government hired a banker from Scotland and asked him to write a textbook for modern banking account. and we study the banking business from Scotland and UK. And he's also be a first chief examiner for when we started to banking supervision. So we have a long history, and I think there is still many lessons to be learned from the UK today. So we would like to build a strong relationship with the UK government to develop an international financial center together. So, for example, we have an entry office, and I've heard that the UK has a similar initiatives. So we and JFSA and can communicate and sending information with the FCA and PRA and other UK agencies. So this would be a very helpful for both of them, I think. So Tokyo Metropolitan Government and the City of London and so banks and so we can communicate with each other, and this would be very helpful for both of them. Thank you.
I think that's a fantastic idea. I think being with the new concierge service that is starting, and given the office that you have, learning from each other on what works best and making sure information on how to do business in each other's market is available, I think is a fantastic idea. And as you say, connecting up regulator to regulator along with government to government really makes excellent sense. So thank you both. We have just 2 minutes left, so I wanted to do what moderators like to do at the end, is have one kind of idea particularly from our business colleagues here, of if you were thinking about asset management at the moment, I want you to give us one idea of where you think there's asset management opportunities in either Japan or the UK at the moment. Matt.
Well, off the top of my head, I think for us, while the main business now is continuing to help Japanese capital invest into the UK and Europe, I think the next step of this would be our specialist area, like we have a specialist area. Our specialist area is sort of energy transition.
Mm-hmm.
The UK is a long way ahead in that. A lot of the things we've had to deal, a lot of problems we've had to deal with in the UK are the sort of problems that other parts of the world, particularly Japan, will have to face soon. So yeah, I guess the next step for us would hopefully be working in Japan, investing in not just sort of solar parks and wind farms, but the whole energy sector. The only way we would do that is in partnership with a large local asset manager to sort of combine their coverage and sort of bench strength in Japan and regulatory status with our sort of specialist expertise. Hopefully that would be the next step.
Okay, so energy transition into Japan. Mari, any thoughts from your side?
Thank you. It's not like necessarily the new idea, but like London has been like our strategic like international business center like up until now and going forward as well. Especially like we have been like trying to encourage like our fund business, and this is the hub center of the fund business like for our company. And even though, like I mentioned, the difficulty or complexity of the process of approval, like as Laura mentioned, like it has been like encouraged, like for that but like more flexibility that will like enhance like our like motivation, like to engage like in this market more. And also the transparency, like as well as like quite good access to that specialized people, like here in London, is very, very strong value and asset. So I'm very confident, like we are going to forward, like enhance like our business, like here in the market.
Fantastic. Well, that sounds like an excellent opportunity. I would love to keep going on that because I know there's a lot more to say, but we will have other speakers. So I just want to take a moment to thank everybody for a fantastic discussion, especially our regulators for getting up on the stage and being so willing to have this debate. I think that as two international financial centres, we have a lot to offer to the rest of the world by working together. And I think having two women leaders of our international financial centres makes us even stronger. So thank you very much, everyone, and we look forward to working with you all.
So we're now going to take a short networking break. The next session is scheduled to begin at 3:15 p.m. For those of you who are here on site, refreshments are available in the drawing room, which is just out of the door to your left. I look forward to seeing you in just under 15 minutes. Right, we're going to make a start with the next session. But before we come to the fireside chat, I just wanted to make some very brief comments about the two remarkable floral displays that you see in front of you, in front of the stage. These are ikebana displays created by Tomoko Kenny, who is head of Japanese business in Europe at Brown Brothers Harriman, and who is also a professor of Ikenobo Ikebana and president of the Ikenobo Ikebana UK and Ireland chapter. And Tomoko is with us here today. Ikebana is a traditional Japanese art form with a 580-year history, originating in Kyoto. It was cherished by emperors and high-ranked samurai and still remains a symbol of sophistication. This New Year arrangement uses the three highest regarded materials in Ikebana: pine, bamboo, and, I hope, pine represents longevity, bamboo symbolizes resilience and growth, and plum blossom is especially revered, blooming ahead of spring. So while it's too early for cherry blossom, plum blossom is in fact even more highly regarded and marks renewal and hope. Tomoko, thank you so much. So we'll now move on to the fireside chat. The theme is capital market reforms, UK and Japan policy shifts, creating investment opportunities. So if we introduce our speakers, the panelists are Mr. Takuya Yamada, CEO of Asset One Management International, Mr. Patrick Heath-Ley, CEO of People's Partnership, and we have Rachel Farrell, Director of Public and Private Markets at Nest. So please do come up to the stage. And the moderator for this fireside chat is Anastasia Nishnyanidze, Trade and Investment Director at the City of London Corporation. So if the panelists come to the stage, and I'll hand over to you, Anna. Thank you.
Thank you, Jack. I'm very impressed with your pronunciation of my surname, so brownie points there. Hello, everyone. Thank you for joining us today. I represent the City of London Corporation, so on behalf of the corporation, it's also my absolute pleasure to welcome you all here today in a room, but also those joining us virtually. I'm going to also attempt some Japanese, similar to Jack. So, konnichiwa, yukoso. Soshete go sanka itadaki, arigatou gozaimasu. So we have a very long title for our fireside chat, but really what we're here to talk about is capital market reforms, and it's very exciting because both UK and Japan has been on a really interesting journey looking at our capital markets and reforms that need to be implemented. I think it's quite interesting because we're talking here about two very mature economies, but both that recognize that we need to do more to generate more capital flow, to look at how we deploy more capital into private markets and alternatives. And both jurisdictions have been on a bit of a journey in that space over the last little while. So today we will unpack a bit of that. We'll talk about what UK is doing around some of the initiatives such as Mansion House Accord, Sterling 20, as well as some broader reforms that are looking at how we can attract more investment and more scale-up capital. And then we will also look at Japan and what Japan is doing around NISTA reforms, what Japan is doing around some of the governance and broader reforms around GP and broader investments that are happening and being deployed more into productive assets around the market as well. I'm very
pleased to have a great panel with me today, and we have lots of expertise in a room. So what I will do, I will go to each of them and I will ask them to introduce themselves, but also talk a little bit about how they experiencing the reforms that are taking place, and what are their organisations doing, how their investment strategies are changing, and how they are responding. So I will actually go to Patrick first from People's Partnership or People's Pension, who brings with him extensive experience at People's Pension, but also more broadly around the industry. So Patrick.
Thank you very much. Good afternoon, everyone. I'm Patrick Heathley. I'm CEO at People's Partnership. We're the organisation behind the People's Pension. That is a large-scale, multi-employer defined contribution pension scheme in the UK. We have about 7 million members. We're a touch off of a £40 billion fund right now, and growing quite a considerable rate. I think a few comments around what's going on. So the DC part of the pension scheme in the UK is growing rapidly. It is almost the future default state of pension saving here. We're around 400 billion as a market today, but we'll be in excess of $1 trillion in about 6 or 7 years' time. So it's a very considerable growing scale market. And the government here in the UK are exercised on a number of reforms of pension savings through the workplace, particularly DC pension saving. A lot of that is to drive some really much needed reforms, I think. Fewer, bigger pension schemes broadly behind those reforms, so scale tests coming in the market. Value for money initiatives, which are really important to shine on where value is being driven. And allow schemes to really focus on what is excelling in terms of returns for members. And a number of initiatives behind that, which I have to say City of London have been very much a part of, on something called the Mansion House reforms, because these bigger pension schemes are very low in their allocation to private markets, both domestically and overseas in general. There are schemes that are a little bit ahead of the curve, but in general, our market has not been favourable to, let's say, slightly more expensive asset classes. It's very much been around how low your costs can be, rather than where do you drive the best value for savers. And that's really important as part of the reforms. The Mansion House Accord effectively gives schemes like ours and across the market an obligation to invest at least 10% of their default fund in private markets, about half of which will be in the UK. So that's a little bit about the reforms, and I think the valuable role City of London have played in terms of driving that.
Thank you, Patrick. And Rachel, might go to you next, because Nest is obviously one of the signatories of the Mansion House Accord. I think Patrick's done a really great way to kind of setting out the broader reforms and then touching on the Accord, as well as reforms around kind of value for money. Keen to get your perspective as a signatory of how Nest is evolving its strategy and where you're heading, but also, first of all, introductions from you as well, please.
So yes, pleasure to be here. I'm Rachel Farrell. I'm Director of Public and Private Markets at Nest. That means I'm responsible for the implementation of the portfolio. Nest, if you don't know, is the largest workforce pension scheme in the UK by number of members. We have currently over 13 million members, 500,000 employers, and about just over 60 billion pounds in AUM. Nest embarked quite earlier than many other pension funds, certainly than other defined contribution plans, in terms of allocating to private markets. Currently, we have 18% of the portfolio invested in private markets, with an aspiration to get that to 30%. And that's because the average age of our members is 40, and they're young. They have, a long time horizon ahead of them, 20 plus years. And Nest, like the People's Pension, is cash flow positive, so we don't really have a liquidity issue. We mostly have an issue of being able to achieve good returns for our members, and private markets is a very helpful component of that. So Nest was a signatory to the Compact, the Mansion House Compact, as well as the Mansion House Accord, and now is part of the Sterling 20. given that we already have 18% of the portfolio in private markets, we already have 8% of the portfolio in UK private markets, we comfortably meet the requirements that we've signed up for, but we're very happy to continue to look at opportunities, and I'm certainly happy to speak about some of the opportunities that we are seeing.
Fantastic. Thank you, Rachel. And before we come to talk about the Japanese initiatives, I think a couple of points that you mentioned are worth highlighting for the audience. I think, first of all, with the Mansion House Compact and then Mansion House Accord, there's this a really positive commitment from DC pension funds to assign 10% of their contribution to private markets. And importantly, 5% of those are being committed domestically, and 5% of those could be committed internationally, which really opens up that opportunity for collaboration and co-investment and conversations with like-minded partners like Japan and asset managers and owners in Japan about where could there be opportunities for co-investment and deployment and flows of capital. So that's been really interesting development on the UK side, and we have some fantastic partners like People's Pension and Nest that are very well advanced on their journey, but we do have 17 signatories, and some of them are a little bit further down in kind of earlier stages of how they're structuring their funds, and they're still kind of open to starting to have those conversations with international partners where there might be opportunities for them to collaborate. But that's obviously very much been focused on the UK. Yamada-san, I might come to you next because we're keen to hear about what's happening in Japan. I guess a lot of similar thematics, but slightly different initiatives. So it would be great if you could please introduce yourself, extensive experience in asset management in Japan, but also globally, and please share with us a little bit of what's happening in Japan.
Thank you. Hello, my name is Takuya Yamada. Very honored to be here. I'm a CEO of Asset Management One International. I'm in London since summer of 2024, so just 18 months past. But I studied in Manchester from 2000 to 2002. So this is my actually a third time here in UK. I'm very pleased with the recent football result. Okay, so I've been with Japanese banking group called Mizuho for almost 30 years. Maybe I look young, but I work for almost 30 years. 10 years in international banking and 10 years in asset management. Had been working with the Japanese and overseas regulators as well. And I hope I can put some of the insights from my experience today. Prior to joining Asset Management International here in London, I was in Tokyo as a strategic planning head of the Asset Management One. There I experienced the implementation of the ESG initiatives, such as the becoming the founding partner of Net Zero Initiative, Asset Managers Initiative. And we also try to learn from the please allow me to check. The asset management initiative. I'm sorry, I will try to remember later. So after I come here, I think it's because of the surge in the Japanese stock price, but this is largely due to the corporate governance restructuring reform. And I've been here for 18 months, but I've seen so many inquiries coming from the investors all around the EMEA region, including Middle East and continental Europe and as well as UK. So we see a lot of, shall I talk more about the reform?
Yeah, please do.
Okay.
Yeah.
Okay. Yep. So in Japan, we've been conducting quite a lot of reforms, mostly namely the policy plan for the promoting Japan as a leading asset management center. This is comprised of three initiatives. One, the first of all, it is the asset income doubling plan. This is aiming at the household sector. And the second one is the corporate governance reform, which is aiming at the corporate sector. And finally, the asset management company and asset owners reform, which is for the asset managers and asset owners. The asset income doubling plan is mainly about the NISA. This is a Japanese ISA. I think they planned to double the number of the accounts of the ISA account in Japan from 17 million in 2022 to 34 million in 2027. Currently, we reached to the 27 million, which is 1/4 of the population of Japan over 20 years old. This is a significant number, I think. If you see the AUM of the investment trust in Japan, now it accounts for the almost 40% of the deposit. So I think the Japan was quite famous for all the people who doesn't trust bank. They put money into the shelves, but now their money is really moving into the investment. It's really changing now. The change in household is there has been, I think, several times we try to move our savings money from the savings to the investment, but this time is quite different from the past. I think several times, especially in terms of the I think learning of the or experience and learning of the household sector has more, I think, wider perspective than before. We shifted at first. I think the NISA program allowed people to invest in the global equity and especially the US equities indices. So it didn't go into the Japanese investment. But now, especially this year, the retail investment is now going into the Japanese investment. And that is one of the main force for the Japanese equity to surge above 50,000 yen in Nikkei average. So that's the big change in the household sector. For the corporate sector, we've been the JFSA and the government has been conducting the corporate governance reform together with the stock exchange. If we see the numbers, share buybacks, this is in Japanese yen, we had like 18 trillion of share buyback. This is account for the more than 30% of large listed Japanese companies in Tokyo Stock Exchange. 30% is almost similar to the number of the US listed companies who does the share buybacks. So we come to that high number. It brings, we have increased number of TOBs, MBOs, and restructuring of the company. I think recently Sony announced its legendary TV section to make a joint venture with the Chinese company. And Fujitsu has been moving away from the hard making company to the software company, and so on, so on. Due to these initiatives, PBR of a Japanese company, which most of them were below 1, like a few years ago, now it becomes 1.7 to 1.8 times in terms of Nikkei average. So we've been doing good, but it is still, in terms of PBR, this number is still lower than FTSE. I think it's 2.2, 2.4, and S&P 500 is more than 5. So we still have a lot of things to do. In January, I think the Prime Minister and the Cabinet led the new panel to further enhance the corporate governance reform. So we will have more to come in the future. Finally, for the asset management sector, we, asset management company, has been trying to disclose what we're doing and try to enhance our performance and so on, so on. the Japanese asset management company has been quite in the. It used to be in the very closed society or closed kind of world, but now it's trying to open up and try to be more transparent. Asset owner side also set the new asset owner principles. So all those changes are going around.
Yep. Fantastic. Thank you. I think clearly a lot is going on, and it's quite interesting to hear how it's changing some of the things and practices of Japanese asset owners. And maybe building on that point, you mentioned some of the changes and reforms that are impacting behavior and how the asset managers and asset owners are reporting, and therefore how that's impacting their strategies and potentially changing some of that behavior. Here in the UK, we're also going through reforms that are trying to influence that a cultural change, risk appetite. We're also looking at retail investment reforms and driving that agenda. So maybe coming back to Rachel, because you touched on kind of opportunities. Can you share with us a little bit more about how kind of where you're seeing the opportunities and how you are seeing these reforms change that sort of behavior, culture, risk appetite?
I mean, I can talk about it as it relates to Nest. I'm sure there's a whole world of, retail investing and how things are changing there as well. I mean, I think that the creation of this default system, defined contribution system in the UK, has been an excellent way, frankly, of getting more retail investors to become savers, because they become savers as being part of their pension fund, and the pension funds are then investing the money in a very disciplined way in order to achieve long-term returns. At Nest, we're looking to give our savers an inflation +3 during the growth stage type return, which is frankly not all that easy, but it is important for them, obviously, to grow their pension pots throughout their lives in order to have an appropriate pot at retirement. Now, we use a full toolkit of investments to achieve that. As I said, certainly the emphasis that the government right now is putting on getting pools of assets like ours invested in private markets is frankly quite helpful, because having a partnership with the government in order to open up parts of the economy to productive investments is really important. It's important for us in terms of achieving returns, but we're also quite sensitive in terms of supporting our members, and our members live and work in the UK. And to the extent that our investments can support the UK economy, that's obviously a virtuous cycle. So that's something that we look at. In terms of some of the investments that so first of all, I think the fact that the government has focused on this is actually quite useful, because it means that it reminds all of us that we should have that lens to always look at what is the opportunity in the UK. Now, we always look at our investments in terms of they all have to achieve ultimately the best investment returns for our members, but where to be prompted to make sure that we consider UK investments always within the opportunity set, it is a good way of making sure we give that an appropriate importance. Where we're looking right now is certainly in scale-up opportunities. The UK has a very, very vibrant VC industry and has wonderful universities that produce all kinds of great ideas. But there's often, and they seem to have less trouble attracting capital at the early stage, but we've found that they tend to have a problem in the scale-up stage. So we're doing quite a bit of work looking at that scale-up opportunity right now, because we think, again, that's kind of a win-win situation. So that's one area we're looking at. We're also looking at things like affordable housing, very early stage, but that would also be a situation where it would be helpful to our members, and to the extent that it can be also a good investment for a number of reasons for the Nest portfolio, that would be something we would want to look at as well. So that's just a couple of examples. I could give others, but I'll stop there.
Thank you. And I'm very pleased that you mentioned scale up, because that's one of the major initiatives that we're focusing on with government. We've been talking about this scale up gap for a really long time. There's so much potential, but also there could be such positive returns on the back of some of those investments. Patrick, I hope I don't get this wrong. I believe you've been with People's Partnership since 2012, and I'm sure you've seen a lot of change and evolution over that time. So I'm keen to hear your perspectives on the shift towards this growth investment mindset in the UK, what you've seen, how things have evolved, and where do you think there might be further learning opportunities?
Okay, I won't let on that I've been there a little bit longer since 2012, but in the job since then. I did start in the mailroom 40 years ago, so I'm a bit of an unusual one. Look. I mean, there's significant shift, and but it sort of links a little bit back to your last question, cultural shift. I think what you're seeing play out is a cultural shift within the pensions industry on the obligation on workplace schemes to invest in the right way and to reform the market in the right way, and I think that's much needed because it's much more centered on the value we deliver. And if we center on the value we deliver, it means we can have a more expansive view on the investment opportunities and how we go about that as an industry. So I think culturally, we're changing the industry first with all the reforms that are going on. Now, that does make it very challenging for the next 5 to 10 years. I mean, we have so many things that are moving around. It is quite mind-boggling. But at the same time, I think it's a really necessary reform because what you will see is organisations like ourselves and Nest and others really seeking that more expansive set of opportunities around investing. And you mentioned their startups, scale-ups. I mean, again, there's some great work being done by the British Business Bank and through the British Growth Partnership. There, we really have tried to embrace, can we find a portal by which this capital can flow to some of those opportunities? So there's really good initiatives going on. We're probably lacking a little bit more in the infrastructure side. We don't have that single conduit. So again, there's a bit of a challenge. There's about 150 odd billion of infrastructure work coming through from government in the next 5 years. So a lot of it is about connecting what has been a fantastic initiative in terms of automatic enrolment, getting everyone saving in the UK and getting that culture of saving happening. But now it's changing the culture of the industry in terms of how we invest the money and encouraging us and some of the people that operate within the market, those advisors that gatekeep some of these elements to move much more to a centre on the value we deliver. And I think that's really a massive step forward, but I think it will take some years to play out. And one other point, I don't think there's enough. I mean, on the UK market, we are an asset owner. Nest are an asset owner. There are several asset owners in the UK, which means we are actively seeking for those connections and opportunities, but we have value at the core already. There is a little bit of a gap between that and some of the other pension providers in the market who are more investment managers. So I think some of the innovation that will happen over the next few years is about how we connect through the right vehicles to ensure we're maintaining value for our savers, but we're also driving that growth in the economy that I think the government's seeking as well.
Fantastic. So obviously huge cultural change happening both in the UK and in Japan. And I think this point around looking at the right structural vehicles is also really important. So I guess coming back to Yamada-san, where do you think there are opportunities for more collaboration, more learning, more partnership between UK and Japan and UK funds as well as the Japanese funds?
Okay. Thank you. Yes, in terms of the maybe learning first, I think Japan also faces the major demographic challenges. So I think the cultural change you mentioned is the one of the first thing maybe we have to learn from UK, because UK is always ahead of us in terms of the demographic change and so on and so on. So that said, I think what we can do in the collaboration is yes, I think as you mentioned that UK pensions now are becoming much larger and are kind of centralized. I think it can be as anchor investor for some of the Japanese initiatives as well. Of course, Japan has a big pension fund, so it can also be an anchor investor for the UK. So what can we do together is I think there's one discussion about the energy transition. And I also think about the infrastructure revitalization, I would say. All those two I think those are the two main topics I think we can collaborate. Especially the UK I think will be the front runner because all the infrastructure is built much before than the Japanese infrastructure is built. So we will see how you do it, and I think we can learn from that as well by investing together. We can also offer the operations like Elizabeth Line, Tokyo Metro is now providing operation. So those are, I think, things can be the partnership opportunities together. Yeah, I have other things, but I stop here.
Thank you very much, Mada-san. I'm conscious we have 2.5 minutes to go. So I might go to each of our panelists. And I would like you to share one thing looking forward that we can do to, and you think we can do to further unlock further capital deployment domestically, and one thing that you think there's an opportunity for us to do more of internationally. Patrick, we'll go to you first.
Well, on the spot first. I think the two are kind of linked in some respects. So I sort of alluded to, I think in the UK, I think we can spend more time and quickly. I think this is getting a little bit more of an urgent issue because we've created through the initiatives the capital ready to deploy, but we need the opportunities on the other side, and then we need to find the really efficient routes to get it there. And when we're operating in isolation as an industry, where we're searching, Nesta searching, everyone's doing it on their own, we're not effective as we could be if we were collaborating more and using vehicles that more centrally could deploy. I think in turn, if that provides better opportunity for us to deploy this capital, which is accelerating quickly into the right opportunities in the UK, we become foundational investors that attract overseas investment as well. You know, why would you invest in another part of the globe if the people in that country are not investing in the same things themselves? So there's a real synergy about, I think the two things go together very naturally. So I'd like to see us get a little bit better on the infrastructure side. I think the growth side is coming. But I think that will give more confidence to overseas investors to then co-invest with us in the right way, and vice versa. That can be reciprocated overseas as well.
Fantastic. Big mantra in my team at the moment, connecting capital. That's what we're calling it. So absolutely, fully behind that. Rachel, I might come to you next.
Yeah, I mean, I think there's already a lot being done, so I want to be respectful and appreciative of that. But I think also there will be opportunities when government can help de-risk certain investment opportunities. And I think, you know, some of the ones that are more difficult to do will require that. And I'm sure that's not underplaying how difficult that may be, but I think that would be the one thing I would like to see government working on. So right now they're encouraging us as investors, obviously, to look at the full suite of investments, which is a great first start. But there's some investments that we just can't do in Nest. It's not, it wouldn't be within our fiduciary responsibility, but with a partnership with the government where they are able to de-risk some of those investments, it would be something that we could do that would still be helpful to the economy in the UK. And we haven't been able to talk about things that we're looking at in Japan, but I just want to say that all the work that Japan is doing in terms of stewardship and governance is really being noticed by international investors like ourselves, and it is creating an additional opportunity set. And given that this is the Tokyo-London exchange, I just want to throw that in.
Thank you for throwing that in. I think absolutely. So Imada-san, from your perspective?
Yeah, from the asset manager's perspective, I think it is very important to connect the opportunities both in UK and both in Japan, and asset owners like you, which is the value, which is truly the value for money, and that's our job, I think, to connect. So we look forward to working with you. Thank you.
Fantastic. Well, what a wonderful note of collaboration and working together to end on. So I would very much like to thank the panel for their time and such incredible insights. So a round of applause to thank you. And I'm going to try and finish with a bit more of Japanese. So arigatou gozaimasu. Kongo sayonaru koyoroku no kikai o tanoshimi ni shitemasu. So thank you, and we'll look forward to collaborating more. So thank you, everyone.
from two companies, but we're just going to rearrange the stage first, so we just have a minute of just sitting for a moment. Thank you for your patience. So our first presenter is Yuna Sato, Sales Manager at Aswini Europe Limited. Please do take the stage, Ms. Sato, and the floor is yours.
Good afternoon, everyone. Thank you so much for your time. I think it's the timing that you start to thinking about the next networking session. But first, give me 5 minutes to describe my company. So my name is Yuna Sato, Manager of Business Development for Asana. It's a Japanese climate tech company, and we are one of the Times World Top Green Tech Company 2025. So who we are? So Asana is a sustainability platform originally from Japan. And we are a one-stop shop for sustainability data solutions. So for example, we provide a carbon accounting platform for the enterprise companies, including supply chains, data management, and assessment. We also provide energy management solutions for factories and facilities to reduce their energy consumptions and energy costs. And we also provide the solutions for creating reporting for sustainability compliance and regulations. So why it's urgent for now? Sustainability is a huge topic, and now corporates are facing huge pressures to go to net zero by government, by regulations, by clients, and by investors. And one core difficult point to do that for a company is actually 75% of the carbon emissions is coming from their value chain, and only 25% is coming from their factories or facilities. So even though it is really difficult and challenging for them to track the suppliers and engage the suppliers, but they need to do this to protect their corporate value. So we developed a platform for the data management of sustainability by using 250 data integration. We support clients to do more efficient data management for sustainability. And we also use AI. So by using AI OCR function to scan their electricity bill or receipt of gasoline, our AI scanning function automatically read the numbers and calculate the emissions factors and use those kind of numbers for the reporting. So one great case for this is we cooperate with Sony. So we provide our platforms to Sony's 200 suppliers, and we create the workflow from suppliers' data to Sony's platforms to centralize the data management. And we are also engaging global suppliers as well. Currently, we are working with supply chains companies across 85 countries. And the benefit for this, it's so simple. We save your time from 6 months for the data collection and reporting to 6 weeks. Beyond just the accounting for the emission, we also provide the solutions for reducing the energy and the cost. So one of our platform, N0, is the energy management system using AI. So we track the energy data hourly and analyze the peak point. And by using the actual data and by using our AI model, we provide the best solutions for the energy reduction. So one good case for this is one of our clients succeeded to reduce their energy cost between 40K to 100K per month. So we actually turned their sustainability effort into their financial impacts too. And we are trying to not only become a platformer, we try to become a one-stop solutions provider for the decarbonization. So by collaborating with around 200 partners who have the solutions for the decarbonization or who have the channels for each industry, we create those kind of ecosystem to provide more better solutions for the corporates. This is the track record of our clients. Currently, we are supporting over 30,000 Japanese corporate. Some of them are global corporate, but still, our clients are based in more Japanese corporate. But now we are ready to expand our service overseas, and now we are bringing our technology and experience into the global. Finally, I would like to share one project with government and financial sectors in Asia. So we collaborated with Singapore and Enterprise Singapore and DBS, and we launched a new project for Singapore corporates, especially who have the long tail for the supply chain. So by providing our workshop and platforms, we supported CDLs to 100 suppliers to get the data. And we supported also the energy reduction for the suppliers as well. So we are also looking for those kind of collaboration in the UK and the European region. Our mission is changing the world for the next generations. So if you think it resonates with you, or if you are interested in our platforms or company, I'm looking forward to talk with you more in the next networking session. Thank you so much.
Thank you very much, Ms. Sato. So we'll move straight on to our second presenter, which is the CEO of Pacific Asset Management, Mr. Matthew Lamb. Matthew, please take the stage.
Well, this next one. Thank you very much for having me. I'm going to talk about technology and how it can disrupt the asset management industry, or how we've tried to do that. I'm slightly obsessed with technology. I did maths and computer science. I also talk at 100 miles an hour, so I'll try and be slow, and I've got to do it all in 5 minutes. I've got 9 slides. That's 33.33 seconds a slide. So I'm moving fast. Let me tell you a little bit about what I want to cover very quickly. I want to talk about the structural challenges that asset managers have when it comes to technology, touch very briefly on AI, and the buzzword that everyone talks about today, this concept of solutions, not products. And actually on the last panel, they touched on that. So what's the problem with asset management and technology? It's pretty simple. In asset management, 2 people get paid. The guy that runs the money and the guy or girl that raises the money. It's that simple. And as a result, no one's ever wanted to invest in anything else. This is now compounded by the fact that many asset managers are encumbered by legacy. And when asset managers are encumbered by legacy, they like to merge together. Now you have 2 firms that are encumbered by legacy, and this gives great business ambition. And the problem is the technology often lags behind that business ambition. But all of this in an environment where the asset management industry is under constant fee pressure, and many of the firms are listed, no one really has any interest in solving a cost expense or a CapEx expense. This is something that Clayton Christensen called the innovator's dilemma. The problem is the business model historically was so good that no one wanted to invest to change it. And you end up with an innovation S-curve, where effectively you need to innovate, which reduces profitability and margins to allow you to capture margins and profitability forward. Of course, if you're reporting quarterly earnings and you're listed, shareholders tend not to like that. So Pacific Asset Management, we started in 2017. And I remember sitting in a room thinking, how the hell are we going to build we're unencumbered by legacy, so let's try and build an infrastructure that works really well. I need amazing technologists. I need a big technology budget, and I can't afford any of them. And so what we decided to do is to think about technology as a profit center, not a cost center. And today, every single bit of revenue that we take, we assign a portion of that revenue to our technologists, and we've given them equity in our technology division. That allowed us to hire the head of data. We ran data for the Goldman Sachs hedge fund, Cantam. It allowed us to run hire the head of multi-asset trading from JP Morgan, allowed us to hire the guy who was responsible for much of the balance sheet at Deutsche Bank. These are PhD, maths, first-class degree technologists that we told, many of you have spent your time trying to use technology to make better investment decisions. I want to use technology to make a better business. And that created this collaborative culture where everyone became obsessed with technology, driven hopefully from the top. But that means today we maintain that collaborative culture. Technology is not a derogatory back office or middle office term. It is part of the business. It's part of what we're trying to achieve. And the foundation of technology is data, which allows us to build a scalable infrastructure, allows us to build common data structure across all the systems we build. ETL structures that can use multiple order management systems. So many asset managers sell their data to data vendors or pay for data vendors to take their data away, and then they pay again for the data to come back to them, which seems sort of ludicrous when it's their own data. So attribution, automation, marketing, client engagement tools, translations, insurance reporting, solvency reporting, allowing fund managers to focus on what they want to do, which is run money, which allows us to create great investment talent and attract investment talent. Which is why today we process 340 million data points a day. We produce thousands of reports. In fact, we produce 25,000 fact sheets, often for other people, every single year. Weirdly, doesn't matter how much money we run, everyone's most impressed by how many fact sheets we seem to be able to produce. It allows us with a 50% lower operating cost than our peers, with more technologists than operating staff. And we've even built client engagement tools that are used every single day. So let's very, very quickly talk about AI. AI, the foundation of AI is data quality. An LLM is to words what Excel was to numbers. If you put the wrong numbers in an Excel spreadsheet, it doesn't work very well. And therefore, data for LLMs to work need to work really well. And too many asset managers are using browser-based technology, which frankly is not regulatory fit for purpose, and I think presents potential security risks. That's why we built PAM AI. It's an internal system, and I won't bore you with the concept of RAG data and all our vector stores. But the idea is that if you can use LLMs to surface the information within your business, you then no longer need intranet sites. You no longer need all of the sort of applications that many people build and have to service within an asset management business. So we now produce all our fund commentaries every month within 3 days using AI, building off our own vector stores, which will have attribution and contribution data within them. And people within the business can ask stupid questions like, what's the OCF of X share class? And pull out the answer. It also links into all the AI engines, APIs, which is a pretty straightforward thing. But if you don't have data infrastructure, you don't have technologists, actually it's not a trivial thing to link to APIs. So whether it's Claude, ChatGPT, Gemini, the front end sits on PAM, but we can use whichever's best. And actually the results can be compared side by side, which I know the teams find interesting. What are the benefits? It's margin expansion in a world of consistently lower fees. Margin expansion is the key. No client ever asks you what your margins are. They ask you what they have to pay for it. So if you can have very high margins, then that's something that no one seems to worry about. From an investment outcomes, I have no idea whether this is going to be successful for investing. But what I do know is that output is the success. Good output is the success to investing. And if you can increase better quality inputs and faster throughputs, it sort of stands that maybe you'll get better outputs. So I think there's a real sense that AI could help turbocharge the throughput and inputs of active managers. It's why as a business, we started in 2017, we've had an annualized growth rate of 60% a year for 9 years. And in fact, we're just approaching $20 billion, having done nearly $1 billion in January. We do emerging market equities, we do credit, we do rates and various other listed infrastructure, etc. The concept of solutions, not products, and this is where I end. The industry loves to talk about solutions and how we're going to deliver solutions and then secretly sells you a product. I can tell you that a solution needs 3 things. It needs a client, it needs technology, and it needs investment expertise. Investment expertise on its own is just a product, and technology on its own is just a product. And without a client, there is no solution. A solution is a marriage between great infrastructure, and great investment expertise delivered in a way that works for clients. That's what a solution is, and that's what we pride ourselves on doing. So that's it with me. A huge thank you to the Tokyo Metropolitan Government and the City of London. You've championed us in Tokyo, and you've championed us here today as a business that started from nothing, 9 years ago. To have your support is hugely appreciative. So thank you very much.
Thank you, Matthew. Next, we're going to go to a closing keynote, which will be delivered by Mr. Hisashi Sekiguchi, Chief Program Officer for Global Financial City Promotion for the Bureau of Industrial and Labor Affairs at the Tokyo Metropolitan Government. Mr. Sekiguchi, the floor is yours.
Hello, everyone. I'm Sekiguchi Hisashi, Chief Program Officer for Global Finance City Promotion, Tokyo Metro Government. Thank you for coming today, despite this weather, but rain has gone. I'd like to introduce Tokyo's initiatives to become a world-leading global financial city. Tokyo has great potential in leading businesses to success. Tokyo is the center of a vast economic zone that has a population of around 35 million. The gross regional product of Tokyo is around 560 billion pounds, which is about 20% of Japan's GDP. Our strengths include a world-class capital market and household financial assets totaling some 10.5 trillion pounds. Additionally, Tokyo boasts one of the largest numbers of Fortune Global 500 company headquarters in the world. Our city is also home to a high concentration of companies with advanced technologies, as well as many universities and research organizations, making Tokyo a treasure trove of business partners and high-quality talent. Tokyo's strengths are not only limited to the world of business. Tokyo stands in a world with a cutting-edge culture, existing side by side with tradition dating back 400 years to the Edo period. Our world-renowned cuisine and inspiring entertainment like kabuki, sumo, manga, and anime that have roots going back to ukiyo-e from the Edo period also add to the great appeal of Tokyo. The Tokyo Metropolitan Government, TMG, is advancing measures to fully harness our city's strengths and potential, seeking to turn Tokyo into a global financial hub, paving the way for a sustainable future. Our efforts revolve around three keywords: resilience, global, and innovation. Tokyo is seeking to become a leading city for sustainable and resilient finance to financially support the realization of a sustainable, resilient world. Since 2017 to date, Tokyo has issued around 2.8 billion pounds worth of sustainable bonds. In addition, last year, we newly issued Tokyo Resilience Bond, the world's first internationally certified resilience bond. In overseas markets, the funds we raise will be used to projects to make cities more resilient, such as constructing regulating reservoirs and promoting the removal of utility poles. Furthermore, TMG implements public-private partnership funds projects to solve social issues through financial strength by drawing on private sector funds and know-how, primed by the TMG's investment. Currently, TMG manages around 20 funds in collaboration with private sectors and working on achieving sustainable and resilient society through promotion of green transformation, shift to circular economy, and supply of affordable housing. Next, global. Here, I will avoid talking about the cases already introduced by Mr. Sato. TMG is developing a living environment where foreign talent and their family can live safely and with peace of mind. Since last year, we have launched a service providing side-by-side support for daily living matters in English, such as procedures at government agencies. This also them to live in Tokyo with greater peace of mind, unburdened by language barriers. Moreover, in central Tokyo, we are seeing steady progress in plans to establish international schools in line with urban development. We have been providing subsidies with foreign financial companies to support the costs required for each phase, from considering their entry into Tokyo to expanding their businesses. So far, British companies, including asset management or fintech companies, have advanced into Tokyo. Through these initiatives, TMG will continue to support your entry into Tokyo of businesses. Finally, their innovation. Tokyo possesses world-class technologies. For instance, the technology for 1 millimeter thick next generation solar cell called Air Solar, which is thin, light, and flexible, was born in Japan. Additionally, Japan's sophisticated railway technology boasts world-class safety and precision. Last May, Tokyo Metro, which is central to Tokyo's railway network, became involved in the operation of London Elizabeth Line. TMG held Sushi Tech Tokyo 2025 last May. Over 600 startups exhibited here, and about 57,000 people participated from 100 countries and regions. In just 3 years, it has grown into Asia's leading innovation conference, both in name and reality. As this will be held this year from April 27th to 29th, so please join us. Last September, TMG and the City of London Corporation refreshed our MOU for the first time since it was concluded in 2017. This revision has newly added cooperation for financial innovation and expansion of investment flows between Japan and the UK. As social issues become more diverse and complex, the significance of multi-city collaboration grows more than ever. We will continue to deepen exchange and collaboration and strengthen the partnership between both cities. Japanese economy has a moderate increasing trend in wages and prices, and is entering into a new phase by overcoming prolonged stagnation, such as raising policy interest rates. Nikkei stock average has also experienced annual increase by around 26% in 2025, and broken its new record high area this year. A great business opportunity has arisen right now in Tokyo. We will give you a warm welcome and for your investments, knowledge, and partnership. Thank you a lot for your attention and partnership. Thank you so much. ありがとうございました。
Well, thank you very much, Mr. Sekiguchi. So, everybody, thank you for being with us throughout today's program. To close the event, we'd now like to invite Chris Hayward, Policy Chairman at the City of London Corporation, to deliver some closing remarks. Mr. Hayward, could you please approach the stand?
Yeah, well, good afternoon, ladies and gentlemen, and Jack, thank you very much for that introduction. Let me express, opening this closing remarks, my gratitude to all of today's participants. As this dialogue enters its 10th year, we can take, I think, pride in a decade of real progress. And while the vitality of this forum testifies to the commitment and imagination of so many, I'd like to pay, if I may, a special tribute to the Tokyo Metropolitan government, who have proved exemplary partners to us here in the City of London. And as we gather here today, financial services in the United Kingdom and Japan stand at parallel inflection points, where Japan's NISA reforms are seeing household savings mobilized for growth investment. The United Kingdom is working to activate private markets through initiatives like the Mansion House Accord, Sterling 20, and the British Growth Partnership. Meanwhile, sweeping regulatory reform is only reinforcing the parallel trajectories of our financial services. As today's dialogue has revealed, action by the FCA and the JFSA is giving asset managers unprecedented access to both markets, with compliance burdens drastically reduced and processes expedited. It's this kind of alignment that demonstrates the extraordinary value of initiatives like the UK-Japan Financial Regulatory Forum. And it also underlines a fundamental truth, which is that today's discussions have only accentuated this, that the UK and Japan are not competing for the same capital. To the contrary, we confront comparable challenges and share a common mission to direct savings towards growth and innovation. Now, when these sorts of interests converge, the possibilities really are transformational. I can think of no more compelling evidence than the cross-border partnerships entered into by Canadian and Australian pension funds across the globe, a strategy that has simultaneously reduced risk and increased returns. And in replicating this model and advancing the UK-Japanese partnership in financial services, the City of London Corporation has already embraced action. Whether through the newly operationalized Office for Investment Financial Services based in our own Guildhall, only a stone's throw away from here where I am based. That is to support and will support Japanese firms accessing UK opportunities. And also, we have, through matching long-term capital with institutional expertise. Altogether, our work is really progressing apace. So over the 10 years of this forum, the promise of our bilateral relationship has only grown. Now this potential must be converted into concrete gains. And so as I very much look forward to my upcoming visit to Japan in March, the first, I believe, by a policy chairman of the City Corporation, I'm filled with optimism for what is to come. I close then by urging action, or if you'll permit me, by declaring Ishoni Susumi Masho. Thank you very much indeed.
Thank you very much, Chris. Thank you. And I can heartily endorse everything you've said about the positive relationship we have on behalf of the IA and the investment management industry. So this brings us to the end of our Tokyo London Financial Seminar for 2026. Thank you so much for being with us here today. Can I kindly ask you to complete the feedback survey that you can capture with your cameras on the QR code on the screen there. I think you get one if you're participating on screen as well. We're also going to send the survey link by email shortly after the event, so you can fill it in then if you miss out now. Following this, we invite you to join the networking session in the drawing room, located just on the left as you exit. And we'll hope to see you in there. Please ensure you have all your belongings with you as you depart, and we kindly ask that you return your name badge holders to the reception desk before leaving. So all it remains for me to do is to say, arigatou gozaimasu. Thank you.